Forget everything you know about smart money concept. In this video, I'm going to show you the particular strategy that you need that will finalize your whole years of trading journey just in this particular video. This strategy, you only need two time frames, our 4-hour time frame and our 15 minutes time frame. The 15 minutes time frame will be as our overall general bias, which means from the 15 minute time frame, we will be able to mark out our other blocks, fair value gap, and other important zone. That will be the use of our 4-hour time frame. Now, in the 15 minutes time frame, we are going to be able to wait for our change of character in our point of interest, which has already been marked in our 4-hour time frame. So once price reach to that particular area, we are waiting for a change of character or we are waiting for an entry model. I think by now you're supposed to know the type of entry model that you'll be using. Neither it's been a 3 price action candle entry model, or neither it's been a mitigation block, breaker block, fair value gap model, order block, or any other entry model. By now you're supposed to know the one that you are familiar with. But now in this video we are going to use the smart money entry model, which is consist of two things: a change of character and a fair value gap. Also in addition with our order block, which means 3 components now: change of character, fair value gap, and our order block. Then the order block will serve as our entry, while the fair value gap will serve as part of our confluence that yes, we are ready to move this particular market. So now this is GBP/USD. We'll be using GBP/USD as an example for this particular strategy. We'll be breaking down this video. We'll be breaking down GBP/USD for you guys, and we'll be doing our back test on GBP/USD and EUR/USD, also on gold, to show you that this strategy works everywhere. We need a 4-hour time frame for our directional bias and our 15-minute time frame for our entry. So now this is GBP/USD. Let's go to our 4-hour time frame. GBP/USD 4-hour time frame. Now, what does our 4-hour time frame says? Now, let me do an illustration to show you what we are looking for. Now, in our 4-hour time frame, we'll be looking for our directional bias. That means, where is price currently going? Is price going to the upside or is price going to the downside? Something like this. If we have a break of structure to the upside, that means price is doing what? Price is going up. Then all we need to do is to wait for price to retest to this particular area, and we are going to join the buy and we keep on moving to the upside. That is what we need to do. And again, another scenario, if price is breaking structure to the downside, all we need to do is wait for price to retest to this area and join in the bearish movement. That is it. We are not trading against the trend, but we are trading with the trend. Anywhere price is going, we are going with it. If it's going up, we are going up. If it's going down, we are going down. So if we're able to identify the market trend, then the next step for us to do is to mark out our order block or our fair value gap. Now, for you to have a valid order block, there must be a valid break of structure. Now, this is a break of structure, and this break of structure is valid because price break this previous low with a full body candle. Now, so therefore, this break of structure is a valid break of structure. After seeing this, we are going to mark out our order block, which will be in this particular area, because this impulsive move will create an order block before the movement, and while during the movement there are going to be so many gaps. These gaps is being called fair value gap. I'm going to show you that in our live experiment in the market. So now we're just doing an illustration. So now, looking at it like this, we need a pullback. Price must at least pull back to 50%, not even 50%. Price must pull back to this order block that we just marked out from our 4-hour time frame. Now, once price should move from here down to this particular area, this will be when we are going to go to our 15-minute time frame. In this particular area, we are going down to our 15-minute time frame to look for our entry model. As I said earlier in this video, our entry model should be our change of character and our fair value gap slash our order block. So we need something like this, and this. This is the change of character and price returning to the fair value gap or order block, and then we are going to join the market to keep on booming to the upside. Now this particular aspect is what we'll be looking for in the 15 minutes time frame, while this particular aspect will be what we'll be looking for in the 4-hour time frame. Now if you want to mark out your order block from the 1 hour time frame, then you're going to wait for your entry in the 5-minute time frame. If you're making out your order block in the 4-hour time frame, you're waiting for your entry in the 15 minutes time frame. Okay, let's take all this out so that we will be. Now this is what we are expecting, and this is just the strategy. This is the A+ strategy. You can see something like this in any pair at least once or twice, or you can see more than 4 times in a month in a particular pair. Now if you are trading 3 pairs, GPUSD, gold, Euro USD, GBJPY, it will be good because at least you're going to have at least a minimum of 10 trading opportunities in a month. Now the point here is not how many times you trade, is how many times you hit your TP. So a minimum trade will expose you more to A+ setup than when there's setup everywhere. So now this is AUD, Euro. I'm going to show you how we'll be looking at the price from now. Now since this strategy compares only on 2 time frame, the 4-hour time frame and the 15-minute time frame. Now we'll be going for our 4-hour time frame first for our break of structure, neither to be to the upside or to the downside. Then we'll be using our 15-minute time frame for our entry. Now this is a bullish movement because when looking at the chart, you can see our break of structure to the upside. From here, break to the upside. Let's see. Okay, another break to the upside. This is a weak break to the upside, but because these candles are very strong, then this particular scenario is valid. You mark out our order block. This is our order block here. All these can serve as our order block, so let's just mark the body. Okay, now this is our order block. All this is our order block, and this is our AVG. Our AVG is from here to here, from here to here. All this is our AVG to show that this particular order block is valid. You understand that? So we just need price to move to the downside, something like this. We just need price to move to this downside, give us our entry model before pushing to the upside. Let's go down to our 15-minute time frame to see our movement. In our 15-minute time frame, you can see price is even far away from this our order block, but because of what this strategy says, you mark out your order block on the 4-hour time frame, you go to your 15-minute time frame and wait for your entry. You mark out the order block from your 1-hour time frame, you go for the 5-minute time frame and also wait for your entry. We are going to hope and wait for price to dish down to this downside before we are going to enter for our buy position. So guys, after all these movements, now you can counter trade if you want to. That's if you only know how to counter trade. But basically, since I'm teaching about this particular strategy, we are not counter trading. We're just waiting for an A+ setup, a break of structure from the 4-hour time frame and our entry in the 15-minute time frame. So now this is it here. This is our zone that we marked out from our 4-hour time frame, and price is already in already. So what we need price to do is either break this structure up, causing us a break of structure, then we are going to enter. So guys, we just add a break of structure from here. This will be our break, a change of character, showing that yes, it's time for us to start pushing up after a very long time of going to the downside. But the main problem here is we do not have our fair value gap. No fair value gap is being seen in this particular area. So this is the trap. If you enter here, this is the trap. Again, you can see this equal lows. From here to here is our equal lows. All these are rejection block. This is a rejection block because it's our equal lows. And again, liquidity are residing below here. Liquidity are resting here. As I said, guys, now you can see price has already swept liquidity, swept everybody out. Everybody that are already in a buy position, price has swept everybody out. So now it's time for us, the smart money, to look for our entry. Let's look for our entry to buy. So how many I do we have here? Basically, you can see we have this I. We also have this I. If price can take all these eyes out, our entry lies in between them. Now guys, price has already taken out the 3 eyes that we marked out already. Okay, after seeing something like this, I will urge you guys to pick out your tool, mark this out as this is now our main change of character, not this particular trap over here. This is now our main man. So our entry should be basically from, this is our other block over here, but it's unrealistic for price to come down to this other block again before going up. If price should do so, I think this other block, this will be the second time price is closing below this particular 4-hour other block and might change the direction of the market. So all we need to do now is to set our entry in between this fair value gap. This is the fair value gap. That should be our entry. Our stop loss should be below here. Let's check. We're working with pips. 30 pips is okay. Yeah, 30 pips is okay. That will be our stop loss. And our entry, our XL, no, our TP should be all the way from where price came. But remember, we'll be working to our TP1, TP2, TP3, and also till our final TP. And how we are going to be marking all this thing out is from our structure. So this will mark as our TP1, 2, 3, final TP. I taught you guys how to trail your stop loss, so go back to my previous video to watch that. Now, if after marking all this thing out and price hit our stop loss, just know that it's part of the game. Basically, we do lose. Yes, I do lose sometimes. Me and my team, we lose sometimes, but our win are 10 times bigger than our loss. We are in, guys. So by now, the signal must have been sent out for you all to start stacking our buy position. Remember, this was a trap, but this is the main order. This is the main movement. This is the main formation, the main setup that the smart money are using to dish out enough profit. Boom. You can see it, guys. You can see it. TP smashed. This took us from Tuesday in the afternoon till Thursday. This is a intraday trader setup because we are working with 4-hour time frame. If you're a day trader, I don't think this setup is for you. But if you are an intraday, this setup is for you because this particular setup is enough for the whole week. Imagine catching 209 pips after risking only 30 pips. We are catching 209 pips. If you do this every week for 2 pairs or only 3 pairs, you will see that your wins will start multiplying. It's not about the amount of trade you took. It's about the amount of A+ setup that you see. You see, seeing an A+ setup in the market takes time. But when it shows, just know that that is the opportunity for you to strike. And if you are striking, you make sure you are striking the right way. you strike the market the right way.